But, as promised, we've got that wealth management discussion lined up, right? What's the opportunity here? But before we go to our guests, let me bring in Nimesh once again on the big deal which he flagged off earlier. UBS coming into 361 Wealth Management. Nimesh, take it away.
Hi, Prashant. So it's official now. UBS has bought 4.95% stake in 361. So 361 will issue 2 crore warrants, equity warrants, at a price of 1,030, which is an 8% premium to yesterday's closing price. So that's the deal. UBS is now entering into 361. Additionally, 361 and its associates have agreed to buy out the small businesses of UBS in India for a slump sale of 307 crores. So that's the money 361 is going to pay to UBS for buying out their broking businesses, the PMS businesses. But the big deal is UBS, which is a global giant, is now entering the wealth businesses in India, buying out or acquiring at least 4.95% stake in 361. Prashant, this is going to be interesting because the entire wealth space is going to be in focus in the very near term. We also have Nuvama, where there is a large private equity investor who's looking to sell out its stake. So even that could be a potential deal going forward, wherein the PAG, which is a big PE investor, will look to sell its stake in Nuvama. And I understand even there, some very large PEs and strategic investors are interested in buying out that asset as well. So overall, there is a bit of momentum now back in the Indian wealth space, and that's what with UBS now entering into 361.
Absolutely, momentum and how. And, if any validation was needed, you're getting that foreign name coming in and wanting to participate in the story. Thank you very much for that, Nimesh, and thank you for flagging off that deal even before it happened. So what lies ahead for the Indian wealth management space? Has the best played out? Is it only the beginning, or are we in the middle of the cycle? Well, let's put that question to Feroze Aziz, Joint CEO, Anand Rathi Wealth, and Ashish Shanker, MD and CEO at Motilal Oswal Private Wealth. Gentlemen, good morning. And for me, it's very special to have both of you on at our 9:30 corporate slot because, all of us have been discussing wealth management and money-making ideas, the wealth creation journey for close to a decade, right, on our personal finance shows. But here we are talking about your business because it has hit such headlines. Ashish, if I could open with you, I was looking at the Motilal Oswal stock. In September of 23, the stock was 213 rupees. Today, it's 680 rupees after the correction. That's the kind of wealth that wealth management businesses themselves have made. Where are we in the cycle, Ashish?
So, Surabhi, thanks. I know, when we come on the 9:30 news, we have arrived as an industry. So good observation. Look, I think the wealth management industry is extremely tailwinded because large parts of the markets are yet to be organized. I mean, if I look at the total size of financial savings in the country, and when I look at the assisted wealth management industry, it's broadly about 20%, if you read all the reports. And there are multiple tailwinds due to which you are seeing liquidity flowing in. So whether it is, monetization from IPOs, monetization from stake sales. Similarly, more and more companies are being generous with their employee stock options, which are also eventually being monetized. So it's a very tailwinded industry on two counts. One is the amount of liquidity that is flowing in. And second is also the fact that, a large part of the industry is yet to be organized. And of course, I mean, as a company, I think we have multiple streams of businesses across capital markets. And as you know, the last 4-5 years have been extremely tailwinded for capital markets as an industry.
Yeah, absolutely. Let's bring in Feroze as well. Feroze, so good to speak to you on the 9:30 news, like Ashish is saying, right? Not just let's talk money. But again, the question is, isn't the space also getting very, very crowded? There are foreign banks that are really pushing forward with their private banking businesses. Everybody wants a piece of the pie, which has been dominated by Indian outfits like yourselves. What about margins and profitability metrics from here on?
Surabhi, my voice is a little bad, but I'm going to try. Of course, it's always a pleasure, irrespective of the time, to talk to you. Point one is, I think the wealth management industry is going to be dependent on the economy, right? If you want to play the India story, wealth management is definitely one of the pieces you will look at, point one. Point two, like Ashish said, there is going to be tailwind, but there are some challenges in the wealth management industry as well. Attrition is one of the largest challenges. Anybody who's been able to solve it is who will have a gathering mass because Rolling Stones gather no mass. So the kind of attrition wealth management industry has been seeing historically, that needs to change. That's point two. Point three, you said everybody wants a pie, a share of the pie, but it doesn't happen that way. If you look at 10 years back, I'll read out some numbers. 2014, if you look at the top 10 mutual fund distributors as a proxy of the wealth management industry, you would see three MNC players, Citi, Hong Kong, HSBC, and you would also see Deutsche in the list of mutual fund distributors. Today, you don't see any MNCs in the top 10 distribution. Indians are relying on Indian names. That's one clear trend which is emerging. I personally think the regulatory framework and the evolution of the regulatory framework is behind us. So the regulatory risk over the next 10 years is far lower than it was in the rear view mirror. So these are some of the challenges, but I think it's a big, big, big opportunity. If you want to play wealth management industry, which is a part of the Nifty Capital Market Index, that's a more broad-based thing than just a specific wealth management part of the value chain.
Thanks for joining us, Ashish and Feroz, and good starting points both of you make there. Prashant here. Ashish, you said, right? I mean, large parts are still unorganized. Can you give us a sense what percent is, because as there are so many wealth managers, are you saying the opportunity is largely for you guys to take business from the unorganized, so-called unorganized segment, from smaller firms? Is that what the game is now about? Because, a large part of the segment which has the money to be able to sort of, invest and has wealth to be able to manage. And I'm assuming that is well catered to in that sense. So is the opportunity market share gains from here, Ashish?
Yeah, so hi Prashant, good morning. So there are two parts to this story. So one is the total stock of savings of households in India, right? So at a $4 trillion economy, your total stock of savings is about $12 trillion. Now, if you look at the split, RBI gives that number regularly. Almost 50% is real estate, and rest of it is spread across gold, financial assets, and certain other holdings like jewelry, etc. Now, two things are happening. One is, like Feroz mentioned, the growth of overall financial assets and savings is dependent on the economic growth, right? Second is, from the stock also, there is more financialization happening. If you look at the number of DMATs which have been opened, if you look at the savings which are flowing through SIPs into equity markets, right? So there is a certain stock which is flowing into financial markets. Second, of the incremental savings pie, because, households still save anywhere between 16 to 18%, of their income, is also flowing more and more into financial assets. Now, if you look at the total stock, and if you look at, and then there is a large bank deposit market, which is not necessarily under assisted wealth management. So roughly, I mean, if you go through reports that have been published on wealth management, about 20% of the industry is with assisted wealth management. So I believe there will be more financializations from incremental monetization that is happening in the economy. And B, you will also see a lot of the existing stock of savings, whether it is in physical real estate, whether it is in bank deposits or traditional forms of savings, flowing into financial assets, and which again is, wealth management again being a big beneficiary. So, the industry will grow faster than the economy, but then certain players who have emerged with a strong platform, very sharp focus on this segment, have the opportunity to grow much faster. I mean, we peg the growth, a good player can grow easily at about 20-25%.
I got that. Feroz, two questions to you. One is, do you have to go down the sort of wealth curve? I mean, the top end is, I guess, where you make a lot of the money. I mean, now I spoke to a player, a large conglomerate, which is entering wealth management. And I said, well, what segment are you targeting? He said, well, it's open. We're going to be offering our services to whoever wants it. So that is there. So is that happening? Are you also forced, are you and the established players also forced to do it? Sort of move away from the really top end, right? And second is how the attractiveness for investors in your companies, of course, is the fact that once customers come on board, they're kind of sticky, more sticky at least compared to, say, mutual funds or other products. So just talk about that aspect as well. Go on, Feroz.
Good morning, Prashant. If you look at our strategy, we think that a company can't be everything to everyone. A focused strategy is very, very critical. So for the last 17, 18 years, we have been existing. We've always focused on the HNI, not even the ultra HNI segment. There's very few players who have a cap on the clients whom they go irrespective of size. So we went between HNI, but not the really large ones. So our belief is any business should try and not be catering to everyone. You have to specialize if you have to create a niche. That's point one. Point two, I personally think we'll not be forced to do it because by design, most who are mass affluent become HNI over a period of time. If you look at last year's, where we have already given our results, so I can speak of it, we made 9% average return for all our clients in a bad year. So that is implied growth without having to bring one new client on one new check. That is the key. If you have implied growths in a business of 9-10%, which implies that the revenues go up automatically by 9-10%, I have to work for the next 10% of my guidance, not for the full 20-25%. So that's what I think is the key differential in the wealth management industry. So I don't think every player will operate very differently. They will reach different destinations in the 10-year period. Unlike other industries where the fates are joined at the hip, I think here, bottom-up strategy will decide what the fate of that business is, not just the industry. Because in the same India, there is one portfolio last year which delivered minus 32% return. There's another portfolio which generated plus 20% return. The macro environment for everyone is same. The Nifty is same. So what depends on is what's your mathematics to create a portfolio and what value you add to the client, rather than which industry you're going to be in or which segment you're going to be in.
Absolutely. Point taken, Feroz, that investors will get more sophisticated, they will get more discerning, and they'll be willing to go where the returns are. So, gentlemen, as we wind down the conversation, just very quick sort of answers will help from you. I go back to my question on profitability. The opportunity is large, absolutely no denying it. But given the fact that the foreigners are coming back in some shape or form or the other, look at this morning's deal, right? So with UBS and 361 Wealth Management, maybe it's like if you can't beat them, join them, right? That's how it seems to be. So in this context, this business will roughly show how much growth across industry and at what margins, and will it need more capital? Ashish, your thoughts, and then I'll ask the same question to Feroz.
So I think on the growth front, Surabhi, I kind of, alluded to Prashant that this industry can easily grow at 20-25%. I mean, not the industry. Industry might grow probably at 14-15%, but there's a big opportunity for players like us to, grow at about 20-25% because of the construct of the industry at the moment and the kind of monetization that we're looking forward to. Second, in terms of competition, should be, I mean, wherever there's a big size of opportunity, you will have players coming in and allocating capital and trying to get a piece of the pie. I think what will matter in the end, like Feroz said, is, what kind of focus you bring into different segments that you're operating in, the kind of platform that you're building in, and the kind of talent you can attract. Because at the end of the day, remember, this is a very people-intensive business, at least at the top end of the curve. As you go towards mass affluent and the lower end, I think tech will play a extremely big role. So depending on the platform that you bring in, the kind of products, the kind of solutions that you can penetrate or offer clients, your profitability metrics can be quite healthy in the longer run. I mean, if you look at yields, I think pure wealth management yields have been between 55 to 60 basis points. I think it's sustainable. And on that, you can add on certain other solutions to enhance the yield so that, clients are also served and, you also grow in a profitable and sustainable manner.
Okay. 50, 60 basis points yields at an average, maybe build in more for customized solutions. Feroz, very quickly, you brought up the point of attrition. And, you see on social media all kinds of takes on how well paid wealth management executives themselves are. I mean, even lower down the ranks in the chain. Would this be, given the multiples the market is willing to give, will we see more deals? Is it a good time to maybe offload some equity in the wealth business, shore up on capital to deal with some of these competition issues?
No, I don't think that way, Surabhi, because an RM moving in for short-term gains is not profitable. We did a study of who left Anand Rathi over the last 10 years and benchmarked them to the people who stayed back. And we realized 90% of them were better off as a benchmark, significantly better off. In the wealth management industry, till the RM understands that if he starts moving, the clients stop moving with him. He gets only one chance in life, or two at best, that a client moves with him. I think that will become more and more prominent. But every time the market does well, you have people who want to outbid another person. So Anand Radhi's strategy has been train them inwards. Okay, so I train 480 people as we speak to make them RMs. So that's how attrition can be. If I buy it from somebody, my army, somebody else can buy it out from me. So that can't be a strategy. Buy and build a business can't be. It has to be built brick by brick. That's one. Your question on capital, I think this is the least capital intensive business.
True.
So ROEs can be very high. Unless you have a conglomerate with an NBFC business, then you need capital.
No, more from a value unlocking perspective. I mean, the business doesn't need capital, but a good time to. I was asking from a more of value unlocking perspective, from a promoter perspective.
So I think the promoter should ride the run for the next 20 years. If we believe in India, I don't think a promoter. I showed up for myself more equity in the last quarter as visible on BSE. So I bought in my wife's name a couple of lakh shares. So I would.
Firoz, how much? What should be? How should the wealth management business be valued? We've got the example of UBS 361. That's been done at about 1.2% of assets. What should be the? Is that the fair one? Should that be the benchmark?
Prashant, in my belief, assets is the most fluid way of measuring it. Some people even count their demat holdings of a client a tax-free bond. So assets is the most unregulated number ever in a wealth management industry. If it is an asset management company, assets are clearly demarked and you have them in your custody using an RTA. So in asset management, I think it's a backward calculation of what was the yield. So I personally think this UBS deal is a bigger message saying that a foreign player will need an Indian partner. Now, Karan sir has been running this wealth management business for the last 18 years. He understands the pulse of India. So MNC is clearly giving a message that you can't go standalone. Several people have tried this. Again, there will be bouts of people wanting to try it. And if you go the full last 25 years to understand India and India's psyche, you can't sit in a foreign country because India is going to be a second decimal number. When 2008 happened, I used to work for RBS. And when crisis happens, wealth management outfits, foreigners pull out during the worst time for the client because that's when the client needs us the most. But the promoter is selling stake in 2008. That's what happened to me. That's why I chose not to work for an MNC. So that's a great message from UBS by doing the
I think Karan Bhagat has done a fantastic job. You've done a fantastic job. And I think that last point is absolutely true. It's true for broking as well. Foreign brokers have left India when markets have been down and out for a couple of years. And I think it's generally the rise of Indian entities in the capital market space by all accounts. Firoz and Ashish, thank you very much for joining us. Good speaking with you. And we'll continue this discussion in times to come because this is an industry which is growing and growing very, very well.